Hello and welcome to the trade setup. In this video we are looking at Supermicro Computer. It is time for another update, and it's actually been a while since we last covered this chart, but there hasn't really been much action, and yeah, we have been just trending lower and then sideways for quite a bit. Now recently, in the last couple of days, we had some upside, and now we can communicate a more clearly defined resistance area, an update, and yeah, discuss what should be the focus of the next short period, over the next short period. But before we get to that, let's quickly cover the long time frame, and here we are still trying to track an impulse to the upside. Now it is a bit challenging based on this initial wave 1 up, because it is pretty much near impossible to count this as a 5-wave move to the upside. So I have to say it is questionable if this overall structure is a 5-wave move, sorry, not a 5-wave move, is developing as an impulse. But I would still like to attempt to track that, because if it doesn't work out, it would be the first level of invalidation. We would first get that data, the data that it is not working out within an impulse, because that would have the most strict rules and levels that need to be held. Now in this idea we can track a double 1 2 1 2 setup here, and then this is where we split into two different scenarios for the larger third wave. Now in the white interpretation, we are tracking a simple wave 1 up, wave 2 down, third wave up, fourth wave down, and then a fifth wave to the upside. Then we have the yellow interpretation, where we still have the same wave 1 up here, a wave 2 down, all the same, but then we have a wave 1 up here, a wave 2 down, a third wave up, a fourth wave down, and then we are now looking to build the fifth wave to the upside, and then we would actually expect another 4-5 pattern in this case. So the yellow interpretation, the yellow scenario, adds an additional 4-5 pattern to this structure. Now for this yellow scenario to work out, we actually have to hold the previous low we formed here in November last year, and it is a bit challenging because yeah, we aren't really tracking an impulse that is forming here in the fifth wave to the upside, and instead, ever since we bottomed here in November, we only formed a 3-wave move to the upside, and then ever since then we have possibly been in what could still be a correction that is forming, and the price, yeah, the structure is quite unclear. The chart is really, or the market is really not decided in which direction this shall go. Now in the white scenario, however, we can still form another low and it would still be fine, but we would expect it to hold this support zone that we have here in white that extends down to the $14 level at the 50% retracement. A break below that level would actually suggest that yeah, we may be in something different, probably one of the diagonal ideas. Very many interpretations we could overall track on this chart, so I'm not going to try and track all of them or even go through most of them. We are going to focus on the two most relevant ones, usually the bullish and the bearish interpretation. Now in this idea that yeah, another low is still possible, we are tracking the orange scenario, where we have within this wave 4 a wave A down, a wave B up, and now we could be in the C wave to the downside. But there is an additional interpretation to this wave B, where we could actually still reset it, where possibly here we had a wave W in the green scenario, a wave X down, and now we could be in the wave Y in green to the upside to form another high and basically reset this wave B, where then I would still be looking for a 5-wave move to the downside in a wave C. So that is valid. We could still push directly higher, but as long as we stay below this wave B top, I do still want to warn you that there is a risk that we push directly lower within this C wave to the downside. We would be in the third wave now, where we quite possibly formed a wave 1 already. Now, for this wave B to be invalidated, we would have to take it out and basically push above it by breaking the $66 level that we have here in a dashed line on the chart. And yeah, before we actually do that, we would have to deal with the shorter time frame structure. And here we basically have two scenarios. So in the green interpretation, this would be a wave A up, a wave B down, that in my opinion would still be forming. Both of these interpretations would rather suggest that the probabilities would rather suggest that there would still be, sure, a higher correction, but then another low still possibly within this support area that we have in green, between $45.8 down to the $32.9 level. But within the orange scenario, we could quite possibly break it completely and push much lower, yeah, even forming new local lows. Now, we could still be looking at different ideas and interpretations on the larger time frame, but I would like to focus now here on the shorter time frame, where I am tracking either a wave 1 to the downside in orange or a wave A to the downside in green. Now, as I said, both of these suggest still lower prices, but both of them also suggest that we should, however, reach the resistance area that we have now adjusted for a wave 2 or B between the $47 level at the 38.2% retracement up to the 78.6% retracement at the $56.6 level. Now, this is an area of high probability to create a reversal back to the downside. And yeah, all of these levels, or really any level within this area, has a high probability of creating rejection, but especially the mathematical levels that we have here as the percentages, the Fibonacci retracements, and also we have some, not very much actually, price structural resistance, especially around these levels, and yeah, this one as well. So looking at this movement that we have formed to the upside in the last couple of days, I could argue that we have an initial wave A up, and we could be looking for a wave B, and then a C wave to the upside. Now, we have been trending higher ever since, so the low was actually here, and we have been trending higher, but this is in such a corrective pattern that I'm not even sure it is part of this structure, and instead it could be just failed attempts to continue within the fifth wave to the downside. And I have to say, this movement does look a bit incomplete to the downside, so it may just be really a truncation in the fifth wave. And instead, I would like to focus from this low instead that we had here on Monday, and I would be looking for support. Since we have started a more significant correction, I would be looking for support in the area between the $43.3 level down to the $41 level, and then yeah, sure, another movement to the upside, possibly in the wave C, possibly extending in a different way within these corrections that we would be tracking. And for now, all I can do else other than this is possibly provide an idea. Let's assume that we bottomed here in the wave B already. We haven't reached the support zone, so I'm not sure how likely that is. But assuming we bottomed here in a wave B, I would be looking for an ideal target for the wave C at the 100% extension, and that would be at around the $49.5 level. Now, keep in mind, it doesn't need to get there within the wave C, and it doesn't need to stop there, but that would be an ideal target. And for now, I'm not assuming that it bottomed, it's just an idea. For now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.